if you hold Nvidia stock, this is going to be important to you. We're going to talk about you should buy, sell, hold, all in, all out. Earnings are right around the corner. One of the biggest financial events that exists in the stock market today. I mean, we literally have people throwing bangers for Nvidia earnings. There are actual earnings watch parties. This stock means a lot to retail investors, to Wall Street, to big tech companies in general, because everybody's sipping that Nvidia Kool-Aid. Everybody needs to buy their chips. Have we reached a peak in data center build out? What is the data telling us? Because at the end of the day, that's all that matters. But first, it's always interesting to look at what Wall Street has to say. After all, they have all the money, right? So just about every single analyst you could possibly imagine has a buy or a strong buy on this stock. And you can see some pretty lofty price targets. I mean, we're talking in the range from 260 all the way up to 350 bucks, 85% upside. What the? Now, I'm not so sure we're gonna get up to those levels, but we did just do an analysis in this video here, deep diving into the projections that Wall Street has and then comparing them to the projections that Jensen Huang has, the CEO of Nvidia, who probably has a better idea than, you know, some suit on Wall Street. But I digress. Watch that video if you want to see some good price target action, because I'm telling you right now, it's crazy. Now, no, this chart right here, this isn't inflation. This isn't your grocery bill. This is Nvidia earnings, and you can see that Nvidia earnings are pretty much going straight up, and when earnings go straight up, usually the stock will follow, barring some catastrophic economic event like tariffs or banning the shipment of Nvidia chips to China. Oh wait, that already happened. Nvidia is so confident in their financial performance in this upcoming quarter that, well, actually their last couple of quarters, they said, hey, don't even include China in our projections because we don't need them. We're going to beat anyways. That's just the cherry on top if we get any sales there, and they're getting no sales there. In borderline, one of the most important things to look at, I know it sounds crazy, but at the end of the day, price action tells us a lot. What are the big players doing? Remember, at the end of the day, don't hate the players, hate the game. Yeah, obviously Wall Street's always going to win. That's why we need to look at the data to see what they're doing. And you can see right here, this is a volume profile. This volume profile stretches from basically April, just after the great liquidation day, after Trump tariffs, all the way up to today. And you can see these two really nasty days that we had. I mean, Nvidia was down, what, 5% and another 5% just in one day of trading. And keep in mind, this is a $4.6 trillion company. So 5%, we're talking about roughly like $250 billion move. So the fact that this held with clear signs that buyers are swooping in and taking advantage of this dip is a great sign moving forward. Look at this beautiful fire pit right here too. How nice is that? It's time to be jolly around the holiday season. You see that? Now, like I said, we need to look at the data. And before we get to the actual AI infrastructure data, if the spending's still there, if it's projected to still be there, what is Jensen Huang telling us? What are analysts projecting? Because it's quite shocking. Before we get to all that, we need to look at some more price action data. I'm going to make it super easy for you. It literally doesn't get easier than this. I'm going to visualize for you trading Nvidia earnings since 2018. What have we done? And you can see the results right here are just phenomenal. Keep in mind, this is literally trading one day at a time for the last 24 earnings events. You've returned 70% on your money buying the day before the earnings announcement and selling the very next day. I mean, these are crazy results. We're easily in the green. Our win-loss percentage is about 63%. And notice the difference of the risk-reward here. The risk-reward profile is crazy. 24% best single trade out of those 24 different events. And your worst loss was about 8.5%. Yeah, a tough day, but you're winning far more than you're losing. And if history tells us anything, which it often rhymes, at least in some way, this is a pretty tradable event. Now, I'm not saying go all in on Nvidia earnings, but the results are promising. And yeah, obviously, if you just held Nvidia over this time period, you'd be a multi-millionaire, borderline multi-billionaire at this point. But that's not what we're talking about today. We're talking about Nvidia earnings. Now, before we get to some more important data, what does Jensen Huang have to say about his position in this world right now?
And you were in Arizona at the plant on Friday. You said there that this is the single most important chip being produced in America. What does it do that makes you say that?
Well, NVIDIA is at the epicenter. We're the engine of the largest industrial revolution in human history.
And yeah, no kidding. They are the engine. I mean, literally every single payment is going to them in some way or another, whether that's through these sneaky debt deals like Meta keeping all of this debt off their balance sheet through some special purpose vehicle, or Nvidia just literally investing in companies so that they can invest in Nvidia equipment. Whatever way you slice it, they're getting a lot of money. And as the engine of the most important industrial revolution that we've ever seen, in Jensen Huang's words, the CEO of one of the most successful companies of all time, probably has some gravity to it. You can see that they've figured out how to make money, and lots of it. Now, I think it's always important to ground ourselves here because it's easy to get stuck up in, oh, well, Nvidia's already ran up so much. Shouldn't we be looking elsewhere for returns? And yeah, that's valid. Obviously, diversifying is important. If you're soft, no, I'm kidding. Obviously, it's important. But at the end of the day, remember, all these things that are happening, all these things that are needed to make it happen, at the end of the day, it all comes back to this one company. And so that's why people are throwing bangers and having earning events watch parties, because it's so incredibly important to our economy, to your job. Sounds crazy. But remember, AI spending is holding up the entire world economy right now. It's literally contributing more to GDP growth than your dollar, your consumer spending. Is that a worrisome sign? Is that a sign that we are in a bubble and the stock market is severely overvalued? Not quite, at least until the demand falls apart and then all this spending goes towards no growth in the economy. But for the time being, it's clear. If this AI capex is now contributing more to GDP growth, then it means a lot to you, the economy, our jobs. If GDP growth collapses, then companies are going to start looking to cut jobs and cut jobs fast. We're already seeing that through AI productivity. Some companies are seeing they can do the same software engineering stuff with one software engineer plus an AI software like Cursor or ChatGPT or Claude that they used to need 6 software engineers to do in the same amount of time. So why have 6 software engineers in that case, right? And of course, it always comes back to the data. What is the data showing us? And we're going to take what Jensen Huang is projecting as the golden star, the North Star, right? Because he probably has the best pulse on the industry, as he literally speaks with executives at all these data center companies, at these big tech conglomerates. He knows what the demand is like, and hence his projections are probably a little more accurate than some financial analyst on Wall Street. He projects $1 trillion by 2028, and mind you, that's a lot higher than any other analyst I could possibly find out there. I mean, maybe some Super Bulls like Tom Lee and Kathy Wood have it higher than that, but that's probably the only scenario I can possibly imagine. And potentially 3 to 4 trillion by 2030. Now, again, it may sound crazy, and it kind of is crazy. I'm not sure if that's going to come to fruition, but again, it's from the AI god himself, Jensen Huang, right? So we're gonna take his word with some gravity. And it's definitely not all fugazi. I mean, you have these deals, this AI infrastructure partnership between some of the biggest tech companies that exist in the world, in Microsoft, Nvidia, some of the biggest energy companies in the United States, GE Vernova and NextEra Energy, sovereign wealth funds. Kuwait Investment Authority literally has over $1 trillion in assets under management, and that's not even the biggest player. Obviously, you have BlackRock engaged in this deal, a company with over 13.1 trillion in assets, the biggest asset manager in the world. If all of these companies, asset managers, sovereign wealth funds, countries, tech companies, if all of these entities are coming together in one cause, and that's to buy data centers, build out AI data center infrastructure, then you can bet your bottom dollar that Nvidia is probably going to be at the forefront of the beneficiaries there, right? And the headlines just don't seem to stop. I mean, we have, in the past, this would have been an absolute deal breaker, right? And nowadays it's like, oh yeah, Nvidia is only shipping 60,000 chips to another country. That's nothing. I've seen deals with 100, 200, 300,000. That doesn't mean anything to me. Like, we're becoming so desensitized to the significance and sheer size of these deals. I mean, it's absolutely absurd. We have Nvidia and the South Korea government working to build out this infrastructure and build this next beautiful supercomputer. I mean, it just doesn't stop. But of course, we need to ground ourselves again, right? Because headlines at the end of the day are just that. They're headlines. They're trying to farm engagement, get people to click on those headlines so they can sell you something through one of their advertising partners. That's all it is at the end of the day. But it's not just the headlines telling us these things. It's funny because I'm literally reading a headline here, but the idea is this is a fact. Nvidia secures 70% of TSMC advanced packaging capacity for 2025. Think about how crazy that is. Nvidia is one company pretty much consuming all of the manufacturing capacity that TSM has available to it right now in 2025. And it doesn't just stop there. The demand for Blackwell and Rubin Ultra, their next generation AI platform, is so large and so evident through 2026 that they're saying, hey, TSM, we really need you to step it up a little bit. We need you to build another factory just dedicated to Blackwell that's going to employ over 7,000 people and produce over 240,000 Blackwell systems. I mean, what is going on here? And this is just to keep pace with demand as early as 2026. And if we're really in the early innings, as Jensen Huang has insinuated, as he's directly said multiple times, then demand in 2026 is going to be just a fraction of what it's going to be by 2028, 2029, 2030. Now, again, that's a major debating point. Is AI data center infrastructure eventually going to get to the point where we're fully built out? Is there really going to be this incessant need for the next frontier chip, frontier AI data center infrastructure so that you can have the best AI models? Personally, I'm not so sold on the whole buy chips and you'll just come up with AGI theme. I think that there's going to have to be some other major breakthrough to really reach AGI rather than just adding more and more compute. But obviously, as you add more and more compute, you should at least expect that your models get a little bit better each time. Is that marginal difference from, 90% accuracy to 90.5% accuracy worth $100 billion? I guess that's up to you to decide. I mean, it really comes down to what the demand actually is, right? Like, we can think all we want over here, but if OpenAI isn't growing at, 400 to 600% per year at this point, then there's some serious problems because they need to cover a lot of money that they're losing like a fire hose right now. And you can see this revenue growth is absolutely absurd. The speed of adoption is the fastest of any technology in the history of humankind, and it's not even close. And their revenue is growing phenomenally fast. I mean, you can see the rate of adoption of just ChatGPT. Number of days to 1 million, 100 million users by technology. What did ChatGPT do it in one day? I mean, it's so absurd. So again, the main takeaway of this data point here is that we need this line to go pretty much straight up, or else all the spending that's being done by these big tech companies is probably not worth it, because at the end of the day, we need the end user, which is you and I or the consumer, to be spending money on the AI model for whatever they want to do. If they want to create some crazy memes on Zora, or they want to be productive with ChatGPT, Claude, Cursor, whatever it is, you need somebody to buy the damn product. So I don't know about you, but I want in on one of these earnings watch party. What do you say? Should we have an Nvidia earnings watch party? That sounds like an absolute blast. I want to sip some Nvidia Kool-Aid. What do you think? Is this a sign of things to come? Should we expect that Nvidia is going to be jumping pretty significantly after earnings? I mean, like we saw, the performance is there. So I want to hear your thoughts. Are you in? Are you out? Are you shorting? Are you buying? Are you YOLOing? What are you doing for this Nvidia earnings event? Definitely seems like a bullish bias going in based on the plethora of things that we just talked about. All data, all facts. That's how we roll. That's all that matters at the end of the day. Oh, how did that get there? What does that say? Subscribe. You should subscribe and like the video if you've made it this far. Thank you. All right, that's it for me now. So, see you in the next one. Bye now. Bye-bye.